The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour on a expiration day where we didn't expect much after the open, and we've got something. That is old Mr. Putin. He's kind of like the groundhog, just keeps sticking his head up out of a new hole every day. And, of course, this one was trying to sneak some armored personnel carriers across the border. And we had quite a big move out here. And I had a trade that was on the opposite side of any volatility. And not that I'm losing money, but I was making money before he rudely interrupted my winning trade. I think my trade is still good for next week, and Monday we'll probably go back to doing exactly what we did before. But we saw a fairly huge move, and actually, about a 20-point move in the S&P cash, trying to figure out what the news actually meant. A lot of people are starting to figure out it probably meant a whole lot less than they thought it did. Currently, we're off at 7 points on the S&P cash, just under 1.9 billion shares on the New York consolidated tape. So volume a little bit better on an expiration day than you would think, but probably because old Mr. Putin is out there trying to sneak some armored personnel carriers in the back door, why he's got everybody over on the front door with humanitarian aid. And who knows if those trucks have anything in them at all, but he's got a couple hundred trucks all painted white. Looks like they're going to be humanitarian, but for all I know, they were filled with troops or arms or water and baby food, but who knows. Anyway, as we react to the geopolitical news, it is interesting to see how stocks react. And this is a very good time to watch if your stock did react negatively to the news. Just how negative was it? With the quality of the news, how did that stock react? Did it react like you thought it should? Did it react a little bit differently? And in my case, pretty good. I've got, I think, 4 positions, and they pretty much did what they should be expected to do. Also held up probably a little bit better than they did. We also have a movement out in gold that was interesting before the move. We were down to, about $12.94, $12.93, something like that, off about 22 bucks on gold before that happened. It had a nice rally. At least the December gold fell $8.60 anyway to $13.0660 an ounce. So September silver in COMEX fell 38 cents to $19.42. And do I have copper? Copper rose 1 cent to $3.10. So most of these things in these lower trading ranges that they've been, nothing really broke out. Gold didn't run 50 bucks as it should if I think this news was totally true. I think it's probably partially true. And that's probably why the muted response so far. Of course, Putin and the leader of the Ukraine, either them or the people that their foreign ministers are meeting Sunday night. So probably going to be an active Sunday night out here if they get together and say some positive things. See, Sunday night over there is probably, 8 hours ahead of us? 7 hours probably in that time zone. What is it? Russia have 9 time zones, something like that. Anyway, I suspect they'll be probably 6-7 hours ahead of us. So that probably means if they're meeting at 7, that's about, noon our time, something like that. Should pretty much have an idea of what's going on before the futures open up once again Sunday night for Monday trading. Of course, we've talked about it the last few days, and that is that we've had fairly light volume. And I suspect that will continue. Probably had a lot of people 1 foot out the door of their trading rooms on Wall Street this morning when the news broke, and had to come back in here and stick some fingers in some dikes to make sure that the dam didn't break. But of course, if there's somebody that doesn't like old Putin rattling a saber, it's all those guys headed to the Hamptons from Wall Street. And I suspect that little of anything that happens next week is going to have a significant move. That we did have a 20-handle move, probably one of the more larger moves. Everybody thought this was over, or at least partly over. That the idea now, at least in international circles, was that Putin would wait and push his advantage when he could turn gas off in the middle of the winter and just let everybody stew and let the Ukraine economy start to falter, and he would swoop in and take care of it. Probably wasn't thinking that these guys sneaking in the back door had been seen several times before. They'd worked out all the positions with artillery, and when those 27 armored vehicles came through, they had their number. And apparently from fairly quick results, about half the column had been hit by shells within about 3 minutes. If they know where you're going to be, and you've got current artillery these days and laser range finders, it's not too hard to go back and shoot something 4, 5, 10 miles that's going to drop within 15 feet of a position. And if you've got a forward observer that can tell you where those shells are landing, you can hone in on them. But at least the beginning reports are that it took out half an armored column on the Ukraine side of the border. So it's going to be hard for Putin to continue to say that he hasn't been incurring over the border. But I digress. And we're going to start in 2000 on this day. The U.S. Securities and Exchange Commission adopts Regulation FD for fair disclosure, which prohibits public companies from leaking material information to selected analysts without letting the general public know that at the same time. Wall Street reacts with howls of indignation, and no bigger howl than Kramer, who worked on inside information. If you believe the books that all his employees told you, he wasn't much of a trader. He pretty much had inside knowledge of everything. But at the end of Regulation FD actually forces at least a few analysts to try something new, actually analyze the companies that supposedly had been studying all along, instead of just parroting whatever the CEOs had told them. And then, of course, lying to the general public and telling the insiders at their company which way to trade, why they told everybody else something different, and why that rule actually came out. Of course, we've seen, and one of the big things that happened is now the guy that runs Business Insider, a big business news service. Of course, he was knee-deep in that when they caught him writing emails that didn't match what his outside analysts that he was giving to the public matched. And, of course, telling people in emails how big dogs these stocks were, while publicly on the outside he was telling that was no end to the height that these stocks would run. Of course, he was pushing Amazon at a time and quoting $1,000 on Amazon stock price, and it only fell 90% from there. And he was eventually right after 12 years. But he was saying that Amazon would be a $1,000 company within the year or 2 years. I think it was within the year, if I remember right. And now he's a constant guest on CNBC as he tries to rehabilitate his countenance. Now everybody can make a mistake, and of course he was being paid to be a paid liar. But kind of the poster boy for that. now, several people were making a lot of cash with this system. Jim Cramer on CNBC, as I said, if you believe his people that worked inside his company, shortly after this, a couple of times he almost ran it broke and decided to leave and go to work for CNBC and other people and handed over the reins to his partner of trading that and started a company called, TheStreet.com. Right about then, I think, as he went public with his own Street.com. But ever since Reg FD has come out, much tougher to figure out. People always, a great deal of people know what's going to happen at a company. And sometimes that information comes from the housekeeper. Maybe the CFO or CEO isn't happy, and someone leaks that maybe days before they're going to report. Maybe they're out buying new Ferraris, which means that maybe that bodes well for this earnings report. But to the point where they would call Wall Street analysts and give them the inside days before they went public with the earnings call, just doesn't happen anymore because, of course, you could go to jail. And this is real jail. This isn't just a couple of days you're in and out. You're going to spend 2 to 4 years if you drop some information out there, which didn't stop a big move in Monster after the bell. Last Friday, there was a 2,000% increase in the calls being bought on Monster Energy. Of course, after the bell last night, we heard Coca-Cola was going to give them $1 billion and some odd money. Millions, who knows? $1 billion, well, it was $1 billion, $2 billion, $3 billion, something like that. But we did see a huge move last week. I was looking at them yesterday, and I didn't really see any movement that would make me think that something was happening after the bell, either last night or tonight. So I didn't jump, but it kind of just, when we saw that activity last week in Monster, really was interesting. But my guess is the SEC is going to be looking fairly deep into those Monster call buying last Friday on Monster Energy. So people still know stuff, and it still leaks. But probably not the CEO or CFO or COO anymore these days. But a lot of people on Wall Street that were inside on this, someone let it leak, and my guess is whoever bought the puts first is probably the person that's going to have to answer and stand tall before the man, as they say in the military. Anyway, we're going to have probably an opportunity to look at more charts these days. Let's see. We've got quite a few out here, so we will take a look, see how they reacted. At the same time, you can always give me a call, 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den, which I would appreciate because I think it's going to be a quiet end of the day.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We we've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, gold down just a little bit more, starting to break that 1950 level on the S&P cash. My guess is they're going to try to push this back up to 1955 for the expiration at close. And we'll keep a quick eye on that. And along with the volumes out here, 1.97. So the volume is at least brisk or better than yesterday, especially at this time. So we will keep an eye on it. But, almost 2 billion shares on the New York Consolidated Tape, and we're trading out at 1951 on the S&P cash. The NASDAQ, of course, just about flat right now. 1.2 billion shares on the NASDAQ. So a interesting volume day, probably a reversal day. But like I said, I'm thinking 1955. Why I'm watching the options trade out here is what they are going to hope to close this at, maybe a little higher. But I ended up buying some calls here in the morning. I figured this was going to be a head fake into the end of the day. So playing a little white lightning. And yes, my fingers are white right now on the mouse. I got two mice. I got one for a machine not in front of me that is all set on the sell button. All I have to do is reach over here and touch that mouse. I've got mice. Anyway, too much stuff going on in front of me, just to say the least. If you have not heard yet, the most important time of the year is upon us, and that is the time to get Tiger dollars at severely discounted rates. If you purchase $500, we'll give you 200 bonus matching dollars, and that'll give you $700 worth of Tiger dollars to use on anything available through TFNN.com. And, of course, if you purchase $1,000, we'll give you $400, making your total of $1,400. The purchase $2,000, and you're going to get $800 free for $2,800. So if you were thinking about getting a newsletter or signing up for a newsletter now, there is no better time to get your Tiger dollars. Sign up now. And is that it? Normally you can buy any amount, but this one you're going to get basically a 40% bonus match on anything as long as you do $500. So this one's a better deal, even if you only spend $500. And of course, that would be enough to get the Tech Insider for a year with change to spare. Ooh, wouldn't that be nice? Well, at least I'd like it. Anyway, just keep an eye on those Tiger dollars, and remember, you can spend them here, and they never expire. So what else do we have? Well, we're now starting to move up 1952.5 on the S&P cash, off 2.5 points. And, of course, that volume picking up. So we'll have to see how the rest of the day pans out. Let's see. I've got my commodities on another computer here. Let's see. And gold off 11. That's what I was trying to look and see. Anyway, what else do we have going out here? Well, like I said, kind of interesting move out here today. Probably one of the most interesting to me was the pop on JCPenney last night after the bell. Of course, this thing pretty much started, it had a little bit of time where it went higher this morning, but it started selling off even before the whole Ukraine Russia issue, but pretty much back down to $9.40. This seems to be a XRT, the retail ETF, looking like it's kind of doing the same thing. I'm looking at the retail sector out here. I think a lot of people talking about retail sales going to Amazon, that kind of stuff. But my guess is this is probably the calm before the storm. Probably going to have at least a decent, I'm not going to say exceptional, fall for retailers out there. But my guess is people kind of go away and then they come back. Margins probably not going to be as good, which I think is probably reflected in the XRT, which is the retail ETF. This thing did gap down, and my guess is that we're probably going to come back and test 83.04, which is the August 1st low in the retail sector. But my guess is that looking at a lot of these stocks out here, another retailer in the toys that's been doing rather horrifically bad is Mattel. If you had a long-term outlook, and maybe a trader, not a bad-looking chart out here. It is breaking through the previous low, but not a lot of volume, really. If you look at Mattel, M-A-T, 9.2 million shares on February 19th compared to, 5.5 so far today. So pretty light volume back out here. We'll continue looking at some of these retailers and some of the other stocks that have moved today. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, kind of an interesting look at the Russian stocks out here. And that's the ERUS, which is the iShares Russia Capped Index. These things really not moving that much today, and I think that tells you a great deal about what's happening out here. Yandex probably the worst, off 2%, but I have a feeling that has a lot more to do with something else, Yandex specific, than any of the other stocks out here in the trading universe. And we were talking about Mattel when we left, and of course, in the meantime, the S&P popped up a little bit more. We're off just 2 points now on the S&P cash. The NASDAQ has gone positive, and it still looks like to me a 1955 expiration is kind of what they're looking for in the end of the day out here. But who knows? This, a lot of people got short out here. They could have a nice little short run up to 1960 on the S&P cash before the end of the day. And we've got plenty of time here. Anyway, we were talking about Mattel. There's a lot of stocks out here that are interesting, that are coming down to these lows. What I dislike is the energy coming down to this last low, which would mean that why these things may have bottomed out, they're going to go sideways for a bit. And going sideways for a bit is probably not a good opportunity to buy, a good opportunity to watch. But maybe if this thing does hold up over and maybe through mid-September or something. This may be one of those nice seasonal runs up maybe to Black Thursday. And we'll take a look at it. ADP, had this in the newsletter this morning. There's a few of these stocks that are giving pretty clear signals as we go to the highs that they weren't going much higher. Automatic data processing was one of those. Even with the market up this morning, it did open, well, not open down, it opened up a little bit, but moving down, should I say. ADP, of course, the symbol, when we look at it, fairly good indication that it's got some big sellers up here around this November 26th high at 83.82, 2.3 million shares. Got into it yesterday with 1.1 million shares, closed back below that high, and we're seeing a little bit more, but even higher and stronger a volume today, 1.1 already. So you're probably looking at 1.3, 1.4 million shares on ADP. This thing looks like it's in a bigger trading range from about 72, maybe 73 back up to this area. So it might be one of these churning markets out here. Big Lots, another company that looks like, boy, is it set up for a 3-gap play. Maybe it's ready to have one more gap on this, but Big Lots, 2 major gaps below. But what you don't see in that is any kind of significant volume in comparison. This thing had a huge volume up day with 2.7 million shares on the 26th of July. It's June? Yeah, 26th of June. And you wanted to see something like that, 2.7 million shares. Last 3 days, 500,000, 580,000. Today, 300,000 so far as it pulled back in underneath that July 3rd high of $46.39. So kind of going back in the trading zone. And it looks like when you look at this, it maybe takes a couple of months to set these next gap ups. But this whole sector with Dollar Tree and all the others buying and trying to sell each other, probably a good, interesting idea that maybe there's one more pop left in this one on news. Unfortunately, if they get bought out, these gaps will probably never get filled. But if the retail sector continues to be weak, these low-end resellers tend to look rather interesting. BioMarin Pharmaceuticals. This is another one that's been bouncing off these lows. The volume has not been low enough for me to think that this thing's anything more than a trading range between about $55 and $67, $68. This went above, tried to break out today. So far, 680,000 shares. Really needed about 2.9 as the June 20th low back here, high back here at 67.11 with 2.9 million shares. So some of these looking a little weak. I had been short well, at least the energy, some of the energy market, and decided to cover. One of the reasons was that we were starting to see some of these offshore drillers see the volume at least dry up. Doesn't mean that it's not going to jump ice and just plow on down, but certainly the last few days it's not given me any kind of big, warm, fuzzy feeling. So we did cover our shorts in the energy on the in the path of least resistance. And what I was looking at was the March 17th low. It's $43.69 that had 4 million shares. And, of course, we were about 5-10 cents above it, but volume has not increased. 1.1 million shares so far today. So maybe you get 1.3, 1.4 million shares, but still going to be dramatically under that March 17th low by more than 50% out here, which sets up kind of a trading range maybe back up to $48. And if these things are going to blow apart, they're probably going to blow apart a little more. And kind of interesting that these didn't really even get a boost out here today with all the Putin news. Another one in that same sector that kind of had me thinking that at least a bottom was in is a penny stock, Forest Oil, Forest Oil, FST. This one might be interesting. It did get a bounce. Almost tested its low on half the volume. You have to go back to the March 14th low at 68 with 6 million shares. And, of course, you came into it yesterday with 3.6 million shares and getting your pretty much your automatic rally out here. But I kind of like this just because, $1.60 to 230, 240 is an awful nice trading range out here. So I kind of looked at it. What I didn't like was the same thing, and that is the energy to this low, even though the last 3 days didn't have the kind of volume, or 4 days didn't have the kind of volume I'd like to see busting the lows and me being short the crude sector. Energy was fairly good on this move down. Yeah, you got to say that the more likely that it goes sideways than blows up. Gold Corp, kind of an interesting move out here. One of these gold stocks that is showing at least some weakness. You wanted to see some decent volume, and what you're going against in Gold Corp, GG as a symbol, is the March 14th high, $29.27, 8.5 million shares. Tried to get into it on the 10th with 6.8 million shares. Tried to get into it again yesterday with 4.5 million shares. And, of course, pull back into this trading range, not unexpected, not a great deal. Even if you look at my Power Law Vector Indicator number, the number on the downside from that March 14th high to the April 21st low was 5.7. You almost have a dollar for dollar move out here from the June 3rd low to this August 14th high, and that number came in at 5.2. So not hugely dramatic, and that's what I'd probably want to put a position on, but it was lighter, and I think that's what you have to take away from that. MWW, Monster Worldwide. Kind of interesting to see this thing coming out sideways. The question is whether or not it goes after this gap at $4.50, but not a bad-looking chart out here. My fear would be that this thing gapped down, but I certainly like it against this exhaustion move day, and that happened on the 1st of May with almost 9 million shares. So you have the huge candle down. You have a move all the way back up, almost to the top of that candle on July 3rd at $7.03, 1.5 million shares, back down to the August 6th low at $5.36. Needs 3 cents lower to actually hit into that. And when you look at it, you got 536 on the 8th. And what did you get today? 538. Boy, is it getting into the very bottom of that. But not a bad-looking chart out here. This is one of the ones that did bounce. And then on the energy on this, other than this huge gap down, just ignore that. Anyway, that huge gap down on the 5th. And you kind of have to look at this thing maybe beating out a low out here. I wouldn't be buying this the next couple of days. In fact, I think you probably have till September to look at this. But not a bad-looking chart out here. So we'll look at that. Again, you can give me a call at 877-927-6648, and or you can post a message in the den, or you can email me at path@tfnn.com. Palo Alto Networks. If I was going to bet one stock was going to be down, it would have been this one from just the charts last night. It has just about everything going for it as a top in place, and that is it's a recent IPO. It's up here with light volume, so you probably want to watch this one. These recent IPOs over the last year not being treated with all that much of kid gloves. Unfortunately, I think earnings on this is the September the 9th. Let's take a quick look. Earnings date. Yep, September 9th. My guess is that's going to be a pretty good day, and I think it's after the bell. That'll be the same day Apple rolls out its new products, so expect Apple to be up, expect the market to be up, at least the NASDAQ be up, and probably going to be a good day. If you're going to come out with some good earnings, you're going to be up already. If you come out with bad earnings, you probably get a little bit of support. Market's probably not going to be in a bad mood that day. But you did come up here, test the volume with 2/3 of the energy. You go up against the June 30th high at $58.78 with 3 million shares to 1.9 million shares on August 14th, 87.79. So you went a penny, $2 above it, $2 and a penny. And let's see what the close out here. Yeah, you're going to close below it, so you're going to have a valid sell signal out here. My guess is this thing, you're probably going to hang out here. Almost all these stocks tend to just want to hang out at these highs until earnings come, but not a lot of good news on this one yet, but one of the better performers out here. When we look at the miners, we've been talking about this a couple of days. I dislike the energy coming back up off this June 4th low. We're looking at the XME, by the way. When we talk about the April 4th high, that's what we've been running into, at least in the S&P Metals and Mining ETF, the XME. You want to see some volume. You needed 2.8 million from that previous high. The August 11th high came with 2.5 million. You're kind of tucking back in there. Volume picking up just a little bit more than yesterday, but I continue to think that miners themselves probably, I don't know if it's an issue with governments or something, but it just looks to me like their expenses are going to continually increase, especially the smaller players out there in the metals and mining fields. So I'm keeping an eye on them. Anyway, we've got plenty of time left. Let's go back here and check the S&P cash. Off less than a point now, 2.1 billion shares. So I'm thinking we're getting awful close to where we're at. Let me check on a few of my positions while we go off here. Not bad. I've got one up 1% already today. I'm rich. Not really. But, yeah, not some bad positions out here. Just look at a few others out here. GME. I'm going to talk about this one a little bit. News out on it. This is one of the stocks that I know is going down, and it's almost impossible to play because of the massive short sellers in the stock. They're probably right. The problem is that you can easily get blown out by a phony earnings report or anything else. News on this out today is that sales, at least retail sales of games, is very low. Online sales of games is very good. And that's basically what they had today was a lot of news out here stating just how poor that retail games sales have been over the last couple of months. Let's see, you going to finish the show, Polar, if your positions hit? I've got a couple of, if you missed the earlier part of the show, I did buy down at the, pretty much close to the bottom lows of the day, some calls that expired today. So I'll be doing okay today. Anyway, looking at GameStop out here, not one of the ones. Pretty bad news, but certainly looks like it's coming back down to this gap around $38. And the volume picking up a little bit here. The problem with a lot of these shorts like JCPenney's, GameStop's another good example, is if everybody knows you're going out of business, the problem is too many people get short. Your time horizons have to be very long, and your risk tolerance has to be very big. One of the stocks that you just know is eventually going out of business, and what can you do about it? BBRY. It's one of these stocks like BlackBerry. I've been talking about this one forever, and that is no matter what they say, no matter what they do, all they're doing is prolonging the agony. These stocks are going out of business eventually. Doesn't really matter. GameStop actually getting into trying to sell prepaid phones, anything to keep revenues up, postponing the inevitable, meaning that I can't cash in on their downfall. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we're watching these move off $1.61 on the S&P cash, 2.1 billion shares. So kind of toying with that 1955 level, which is where I think we're going to close out here. And my pop, I'm already out of my calls, by the way. Somebody asked in the den. I wanted to see him get close to unchanged, and that was good enough for me. So I'm out of it. I've got the rest of the day off, other than to come back at the 4 o'clock hour for the Tech Insider. And I'll be doing the whole shebang today. And I think who's doing the 3 o'clock hour? We've got somebody new coming in here for the 3 o'clock hour. So we will, John Logan, I think. So we'll get a double shot of John Logan today. Get a double shot of me today. Anyway, I want to look at some of these other stocks that were hitting highs. Tesla Motors starting to get some bad PR, at least a little bad PR. Certainly light volume back up at these highs. And the question is just how well Tesla will hold up over the few coming weeks. I'd like to pull the trigger on this one. It has everything in the chart that says it's going lower. Unfortunately, I have a feeling that we need a market moving lower, and I don't think we're going to get that to get Tesla to break. And I think we could probably see some rather dubious news spike this $20 and run out the shorts. And at that point, you're going to have a lot of guts to want to pull the trigger on Tesla. But, in the chart, you got everything you're looking for. February 26th high, 265 with 24 million shares. We've come into it, and the best volume you could get was 8.1 million shares. The energy down compared to the energy up is off probably about 20%. And if you look at my power law vector indicator numbers, 8.5 to 6.8 on the way up. So just about everything we want, including a higher volume low at 177.22. And the question is just whether or not you get kind of a blowout top on this before it starts moving back down. Got a lot of stocks out here with 3 gap plays that have set up. Netflix is another one of these. NFLX. And why revenue is probably not a problem. It's going to be an issue of how much money they can keep. And we'll probably talk about that on the Tech Insider Hour tonight. But as we see a transition from our cable company to being our internet provider, in fact, revenues from internet service now are outpacing revenues from TV service for companies like Comcast and Time Warner. I think that they see the writing on the wall, and that is that they're going to be fairly close. What you're going to look for in Netflix for a high out here is the July 2nd high at 475.87, 5.4 million shares. We're about, $12, $13. That's 1-2 days away from it on Netflix. I think we could easily see that too, and there's plenty of people short on this. But a lot of these stocks do have 3 gap plays beneath them, and those 3 gaps are still open, big gaps, and just waiting for a market to set back up. But I think there's going to be a lot of money made to the downside on these. Unfortunately, it may even take to the end of the year before these things are ready, and that's going to take a lot of patience. A lot of people are not going to have. And especially with the charts looking like they do, you could make a very good case to pull the trigger now. But I think there's too high a short interest rate, especially the next 2 weeks, as we expect much lower volumes. I'll see you back in another hour after a wonderful hour of John Logan. And remind you to sell when you can, not when you have to. And we'll catch you next week with the Power Trading Hour between 2 and 3 Eastern Time. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.